40s for our Thursday. We'll see some sunshine to start, but extra clouds start to mix in for the afternoon. High temperatures are just a little bit cooler, with highs in the low 60s. We'll go back down into the mid-40s overnight. Mid and upper 60s back for our Friday with scattered rain by the afternoon. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
How do you know which vitamins, herbs, or homeopathics are right for you? Come to Lowry Drug. You will be amazed at our selection of natural products, including vitamins, minerals, protein supplements, herbs, homeopathics, essential oils, and Bach flower remedies. We have quality products and smart selection for your better health. Come see us at Lowry Drug on Harkness Road in Statesville. Call 704-873-2247. Come see us.
The following is a paid program and does not necessarily reflect the views of WSIC. Whatever the story,
we have to end our dependence on China.
Have your say.
This debt crisis is going to set our economy back big time.
This is WSIC News Talk Now.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here, 4 o'clock hour on Thursday. You've got 53 minutes and 10 seconds until we get to the 5 o'clock bell, and I appreciate so much you hanging with us here on Dollars and Cents as we give attention to, and perhaps we might even spark some conversation regarding items of financial and economic importance. Now, you know, as a previous listener to Dollars and Cents, talking on any number of subjects, going to be doing that again here today. It's earnings season, folks. You know, one of my favorite times of the year comes around here about every quarter or so. So we got a lot of companies making a lot of earnings reports. We're going to be talking about some positively, some not so positively relative to how they reported and what they see going forward. But you know, as a previous listener, again, nothing that we're talking about here investment-wise, planning-wise, is intended as a recommendation for you, meaning that we strongly recommend reach out to your tax advisor, your financial advisor, or you can reach out to us at North Main Financial Group. Love to hear from you. Love to chat about your particular financial situation, see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, Main like the street, financial.com. Hey, we have a contact page on there. Leave us an email address or a phone number. Let us know the most preferred and desirable ways for us to contact you, again, at northmainfinancial.com. You're also welcome to call us here in the studio. Producer Reese, I'll get your call. Not going to promise that I can get to everybody's call or subject matter here while we're on the air here today, but I promise if I can't get to it today, I'll get to it in next week's show. I keep a list of things that I know are important and pertinent relative to your particular space. 844-STUDIO-4. You can call us here in the studio, 844-788-3464. That's 844, again, 788-3464. Here in the studio, you got something that's on your mind. Can't give specific financial advice. You know that. I'm also not your guy for the hot stock tips either. I promise you that. You call, what should I be buying? Well, I'm going to give you a terrible answer. I have no idea. It kind of depends on what your situation is or what you're trying to accomplish. Do you understand the risk involved in something that's maybe quite a bit more speculative or something that's maybe more conservative? All of those kinds of things go into play here. So I'm not going to be your hot stock tip guy, but I certainly be happy to opine or to give some reflection on my experience if there are particular things that have come across your radar screen. Maybe you're looking at retirement. Maybe you're looking at rolling over a 401k. You're looking at your insurance portfolio, all those kinds of things, and certainly in general ways I can speak to that. So 844-STUDIO-4, 844-788-3464 here in the studio. All right, let's jump into it. I mean, we got a lot. I'll tell you here, I got a whole lot. And also, got the Super Bowl coming up. I mean, Super Bowl's coming up here in a week. This is kind of that bridge week, you know, kind of weird. Where you have this, and this has been true for a long time now, where you have the championship games, the conference championship games one week, and then we have this week off, and then we got the Super Bowl coming up the following week, and they're doing some stuff with Pro Bowl, but it's not really the Pro Bowl kinds of things now. It's sort of a new twist on the Pro Bowl where they don't really get the helmets and pads on. They do more of a skills competition or flag football style, which I think makes more sense anyhow. I mean, that way nobody's getting hurt on those kinds of things. But we got that kind of stuff this weekend if you're looking at that. But then we got the Super Bowl next week, and I'm sure we'll get even more hype and even more of the excitement that goes along with that as we go through. So football week, we're going to be talking football food here. You like that alliteration? Football, food, and finance is what we got going on here. Well, we got that going on most days. It's certainly going to be true this week when we're here on Dollars and Cents. We'll be talking about that a little bit later in the show. But before we get to that, got to talk earnings, and it is earnings time. I mean, earnings season it takes on a little bit of a different flavor now than it has in the past. Generally speaking, you had 4 different times of the year where you had quarterly earnings for the obvious reasons, and most companies all reported right around the same time. Now that fiscal years have become so prevalent with so many companies for a number of different reasons, usually due to the non-calendar sensitive ebbs and flows of their revenue streams, meaning that fiscal years make more sense. It's really not true anymore. We really have about 6, maybe 8 times during the year where we have bubbles of companies that are reporting. This is one of those bubbles right now. So let's go ahead and get into it. A number of them here just this past week, up to and including today. And actually, I didn't get a chance to take a look at it, but I know one of the biggest ones out there, probably reporting right about right now. If you're listening to this live broadcast, or if you're listening to this recording, just happens to be right at this point, Apple. Apple, one of the biggest companies literally in existence as measured by market cap. Ticker symbol Alpha Alpha, Paul Larry. Not a recommendation to buy, sell, or hold Apple stock or bonds. They're reporting their quarterly earnings right now. So I don't know what their report is. Probably during one of the breaks, I'm going to sneak online and take a look at what may be hitting the headlines on the Associated Press or Reuters wires to see what the general sentiment is as far as their quarterly earnings are concerned. But they're reporting today. Before that, though, a couple of other really big ones, especially in the tech end of the universe. Got to talk Meta. Meta is the parent company of Facebook. So that's let's call it the larger, the more broad or the broader holding company, which primarily includes Facebook. Boy, they hit it. Boy, especially on the top line end of things from a revenue standpoint. Very, very good quarter for Meta. Literally record quarterly revenue, the most revenue they've ever had in a single quarter. But boy, are they spending money. And they are spending money literally by the billions with a B on AI-related kinds of things. I mean, AI is really dominating the tech conversation in so many ways. We're going to talk about some of the disruption that happened a little bit earlier this week with a report out of China about this group called DeepSeek, that we're going to talk a little bit about that, what that means for the semiconductor industry. Is it a lot of noise about nothing? It certainly surprised the market. And, of course, the market hates surprises on just about every level. And certainly it was surprising to the market. A lot of the semiconductor stocks and related AI businesses really took it on the chin earlier this week. We're going to talk about that a little bit later in the show. But Meta, again, the parent company of Facebook, crushed it. Revenue-wise, crushed it. Spending a lot of money, but they're also making a lot of money. And they continue to be just a cash-producing machine over there at Meta. And certainly that's what we saw here in the most recent earnings. Again, ticker symbol for Meta, Mary Edward Tom Alpha, META. Not a recommendation to buy, sell, or hold the stock or the bonds. But certainly for this quarter, they came through very strong. Another one that came through, again, very popular name. Not nearly as strong, though. Comcast. Ticker symbol on the A-shares end of things is Charlie Mary, Charlie Sam Alpha. Not a recommendation to buy, sell, or hold the stock. Very disappointing quarter. Down in their subscriptions, down in terms of their internet subscribers as well for the last 5 years. And you can look at this one of two ways. Yeah, actually, for the last 5 years, the total return on CMCSA stock or Comcast A-share stock is negative 22%. Meaning that's the cumulative return over the last 5 years. Comcast, huge company, but they are challenged as so many of these entertainment and content distribution companies are with the changing nature of what it means for us to consume entertainment. We've got streaming services. We have all of these other online sources now. Very, very challenging for the more traditional legacy sources. And you've heard us talk about that. We're going to keep talking about it to see what it means for the changing landscape. All right, we're going to take a few seconds here to hear from our sponsors. Appreciate you hanging with us here on Dollars and Cents, presented by North Main Financial on WSIC.
Keep it right here. Dollars and Cents with certified financial planner Joshua Dobi will return shortly on 105.9, 100.7 WSIC.
Well, increased fire danger still hangs with us for the next couple of days, so avoid burning if at all possible. Overnight, a partly cloudy sky. Temperatures will dip back into the upper 30s and low 40s. For our Thursday, we'll see some sunshine to start, but extra clouds start to mix in for the afternoon. High temperatures are just a little bit cooler, with highs in the low 60s. We'll go back down into the mid 40s overnight. Mid and upper 60s back for our Friday with scattered rain by the afternoon. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
The WSIC app is available now wherever you get your apps, featuring local deals from great local businesses like iCats Public Transit.
Here's your WSIC community calendar. Beer Lab in Mooresville presents Music Bingo on Thursday night, January 30th. 4 rounds begin at 7 p.m. with a chance to win prizes for each round. Don't miss Ghostface Brewing's beer lineup and their menu of pizza, wings, and salads. Beer Lab on Broad Street in Mooresville presents Music Bingo on Thursday. Bin 110 in Cornelius kicks off 3 straight nights of live music on Thursday, January 30th with Peyton Belligan and Christian Stewart. Friday night, Chasing Phoenix performs, and Saturday night, String Theory takes the stage. Make your weekend count with 3 nights of live music Thursday through Saturday at Bin 110 in Cornelius. On Friday night at Micaiah's Bar and Live Music, Rumor Mill performs their first show of 2025. Come listen to the classic rock songs and sounds of the 70s, 80s, and 90s with Rumor Mill at Micaiah's in Mooresville, Friday night at 9:30. The Statesville Chamber of Commerce presents the kickoff event for Surge, a group for young professionals of Iredell County, on Friday night at the Watering Hole on West Broad Street in Statesville. Surge fosters relationships, develops business opportunities, supports civic involvement, and promotes an overall investment in the future of the community. Join Surge for games, food, and networking Friday at 6 p.m. at the Watering Hole in Statesville. Class is in session at Charlotte Motor Speedway with their selection of racing schools. Buck Baker's Seat Time Racing School was founded in 1980 by 2-time NASCAR champion Buck Baker. Graduates include Jeff Gordon, Tony Stewart, Ryan Newman, and thousands of people just like you. Book now at 704-998-1957. Visit charlottemotorspeedway.com for more details and information. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Making your money make sense. Dollars and Cents with CFP Joshua Dobi on 105.9, 100.7 WSIC.
76 years strong, and we're still the one. WSIC. News. Talk. Now.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second quarter of today's show, Football Reference. Folks, we're still in the football season. We got one more big one sitting out there. It's the granddaddy of them all. I used to say that about the Rose Bowl. We don't say that as much anymore with this new playoff format in big-time Division I football, college football. So I gotta look at the Super Bowl, call that the granddaddy of them all at this point. So we got that coming up here next week. Going to be a big one. I mean, it's your teams may not be in it. I get it. I had maybe some different desires for teams to be in there. Specifically, our Carolina Panthers, which, as producer Reese and I were discussing during the break, will have exactly the same opportunity as whoever wins the Super Bowl to win the Super Bowl next year. Meaning that everybody starts out at 0-0. It's there. You don't get bonus points for winning the Super Bowl, which means our Carolina Panthers are absolutely going to be on even ground, even footing in terms of the possibilities to win the Super Bowl next year, and I'm here for it. I'm ready for that to happen. All right, let's get into, getting back to earnings season. We're talking about Meta. We're talking about Apple. We're talking about Comcast. Some positive, some negative there. Definitely, Meta crushed it. Comcast, not so much. Going to keep moving down the list here. Tons of them. Gosh, I'm not going to get to all of them. These are just the biggest names that came across here. Microsoft, again, arguably one of the biggest ones out there in terms of name brand recognition, certainly in terms of market cap. That's the case. Ticker symbol, Mary Sam Frank Thomas. Not a recommendation to buy, sell, or hold the stock or the bonds. They had an okay quarter. I would say certainly by Microsoft standards, I think it was okay. Kind of, not too warm, not too hot, or not too warm, not too cold. Definitely an uptick in their AI spending. They are spending billions with a B, just like Apple is. And but their cloud computing business, which really that's under their title of Azure, Azure, is that end of the business model has really been driving a lot of their profit margin here for the last several years. And that was down, meaning that was below expectations, and that really put a pinch on earnings for this past quarter. And that's what really the market didn't like. Because they know, the market knows that Azure is really driving that earnings end of things. Definitely more modest there. Stock actually pulled back a little bit for today with regards to the quarterly earnings reports. Just kind of interesting to see that. So, but another one that just crushed it out of the park, Broadcom. Broadcom, one of those semiconductor IT companies. Ticker symbol Alpha Virgo Green Oscar AVGO. Not a recommendation to buy, sell, or hold the stock or bonds. Very positive quarter. Crushed it. 50% revenue growth, which we're talking about, again, tens of billions of dollars, over $100 billion companies. I mean, these are huge companies. So to have 50% revenue growth in quarter over quarter, that's amazing. But it just shows some of the power of growth that has been a part of these technology companies here for the last couple of years. And certainly these ones we're talking about, whether it's Meta or Microsoft, Apple, Broadcom, I mean, these ones have been really at the top of the list. Just crushed it. And the market liked it. It was up 4 or 5% before I came online here for today's show. Again, not a recommendation to buy, sell, or hold them, but certainly a positive quarter. Now, on the other side of things, again, one of those names that's fairly ubiquitous. I mean, is a name that probably most of us are going to recognize here. Caterpillar, the big heavy machinery company, big dirt movers, big project kinds of things over there at Caterpillar. Missed. Revenues missed. Their guidance before the announcement really wasn't close. And they blamed a number of different factors, certainly interest rates and inflation in that mix, not nearly as much from an infrastructure standpoint as has been anticipated in terms of spend, specifically looking at federal contracts kind of thing. Definitely hasn't been moving in the ways that the market was expecting, and they took it on the nose here a little bit. Missed on the quarterly earnings, top and bottom line, and certainly the stock price reflected that as well. Now, to end on a little bit of an uptick, or at least on this short list here of companies, looking at MasterCard. So MasterCard, if you're not holding that, you're probably holding Visa or American Express in your wallet. If you're not holding a credit card, you're probably holding MasterCard or Visa debit cards in your wallet there. So again, a fairly ubiquitous name. Ticker symbol Mary Alpha MA. Not a recommendation to buy, sell, or hold the stock. Very positive quarterly earnings. And I'm going to raise my hand quickly. I wasn't anticipating that MasterCard was going to come out with such a rosy report, but they were very upfront in saying it's based upon the strength of consumer spending, which I guess is implied, right? If you're a credit card company and you got more folks who are carrying more balances on their credit cards, that means more revenue for the credit card company or more transactions specifically, also because they're paid by transaction in addition to keeping the spread on their balances. But that's one of the things that kind of jumped out to me, that yes, transactions were up, and that definitely spoke into the number of folks who are spending, which can be an indication of consumer strength. Very, very important when we're looking at economic activity. However, higher balances and a larger number of folks carrying balances. So in my end of the world, as I'm scraping the layers of the onion there a little bit and looking at that earnings report, yes, more folks spending more, but they're not all paying off their balances. So that's a counter that in my world. I mean, that's a counter to the consumer strength argument, because just because folks are spending doesn't mean necessarily that they're doing well if they're carrying those balances. So that's something we're going to watch. It's very, very important to look at that from both ends of things. And but MasterCard is kind of one of those bellwethers out there that that really is some level of indication about where the consumer is. And so the market liked it. I'm going to hold judgment at this point. Kind of want to see what happens with those balances and whether folks start paying them off in faster ways. All right, got to get into this one here. This this really just rattled the market earlier this week, as of the time of this live broadcast, or as of the time of this recording, if you're listening to the broadcast. And I'm just going to throw the name out there. And I'm also going to raise my hand by saying I had not heard of this entity until it hit about just almost every Business News Wire that I watch at the beginning of the week here, literally on Sunday. And it's this group out of China called DeepSeek. DeepSeek is the name of the group. Again, out of China, a company based there, started there, and specifically their AI structure, their AI model. And what really caught the market by surprise was first of all, not a whole lot of folks had heard about them, and then B, how, as they advertised, inexpensively they built this structure that apparently may or may not have, how can we say this, borrowed some things from other people. That's probably about as politically correct as I can say that. And I'm hardly an IT person, so I really can't say with conviction either way. However, in hearing from a number of other AI-related entities, it certainly seems like they borrowed some things from other people in some way. Is that fair enough to say? I guess as we're looking at it here. Anyhow, they claimed it only cost them $6 million to build this thing. That's what I think took the market really by surprise. And I don't want to make light of $6 million, certainly. But when I shared with you earlier in today's show, which continues to be the case, that groups like Meta and Apple and Microsoft are spending tens of billions of dollars each quarter, meaning tens of billions. I mean, they're spending $40-50 billion a year on AI chassis, on AI intelligence kinds of things, meaning building their intelligence banks or building the strength of their product. And this group comes out and says, yeah, well, basically we got the same thing, but it only costs $6 million to build. Okay, now you have to take things that come from China on a company level with a pretty significant container of salt. Yeah, you really do. And that's not speak poorly of Chinese companies, not doing that. I'm also not recommending or saying that you shouldn't buy Chinese companies. What I am saying is that because of the nature of markets in China and the fact that the Chinese government, if it's a profitable company, probably has its hands in it in some way, shape, or form at certain levels, that this just caused people like me to kind of look askance a little bit, maybe wrinkle my brow a little bit and wonder just how much of it was true. But the market certainly took it to be true. Or let me say it this way. The market got spooked. And so you had semiconductor companies, you had energy companies that have been banking on AI development and the need for a larger, more robust energy grid. You had other developmental companies connected to AI. Boy, they almost across the board really took it on the chin here at the front end of the week. So you had your semiconductor companies, Micron, NVIDIA, Broadcom, excuse me, and the like. Similar kinds of Lam Research that was, just across the board, really took it on the chin here earlier this week because I think a couple of different reasons. So this is my speculation. This is my subjective look at it at this point. That in looking at it, first of all, these companies, most of them, had done very, very well recently. And I think the market was basically looking for a reason to sell, to grab some gains. This kind of surprise came out. It was a good, easy reason for folks to sell. And I think that's what happened a little bit. I think that was part of what was in the algorithm of selling because several of them bounced back pretty notably the next day. Not the whole way, but bounced back pretty notably the next day. But as I mentioned at the front end of today's show, market never likes surprises, especially to the negative, especially to the downside. And this kind of came out of nowhere, and I think that's what really caught the market sideways a little bit. So when we saw that movement earlier this week, when we saw that there was, let's say, not as rosy of an outlook than with regards to semiconductor companies and some of these high flyers that have really propelled the market. We saw the more aggressive end of the market, which had been floating, meaning in a positive way, a lot of the performance and a lot of these indices really take it hard. What was also interesting in the rotation, the money didn't go to cash. The money went to the value end of the market. So we saw a pop up in things like pharmaceuticals, oil and energy, consumer staples kind of thing. Very, very interesting. So it didn't go to cash out of fear. It really rotated into the more value end of the market, which would indicate that, okay, folks don't want to be here, but they're still willing to be invested. Very, very interesting dynamic there. Looking at it in a microcosm, but still very interesting to see. And so we're going to hear more on DeepSeek. I'm sure we're going to be talking about it in future shows. You know that. We'll keep bringing it up. But first, we're going to hear from our sponsors here and be back in a moment on Dollars and Cents.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
Well, increased fire danger still hangs with us for the next couple of days, so avoid burning if at all possible. Overnight, a partly cloudy sky. Temperatures will dip back into the upper 30s and low 40s. For our Thursday, we'll see some sunshine to start, but extra clouds start to mix in for the afternoon. High temperatures are just a little bit cooler, with highs in the low 60s. We'll go back down into the mid 40s overnight. Mid and upper 60s back for our Friday with scattered rain by the afternoon. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Prioritizing your health is one of the best ways to take care of yourself. From routine visits to the joys of pregnancy to the illnesses that stop you in your tracks, Iredell Health System will be by your side. Learn more at iredellhealth.org.
Hey, it's Kevin Harrison with Harrison's. Now's the time to load up on layers. From lightweight long-sleeve t-shirts to heavy-duty Sherpa-lined coats and everything in between, Harrison's has what you need to work safe and work warm all winter long. Come see us on Norman Station Boulevard in Mooresville.
Hello, everyone. This is Joshua Dobi, president of North Main Financial Group. At North Main Financial Group, we move to where you need us: investment management, insurance planning, and estate strategies. No two people are the same, so we customize our planning based upon your needs. Reach out to us at northmainfinancial.com. That's northmainfinancial.com.
Hi, this is Bob McIntosh with the McIntosh Law Firm in Davidson. Since 1997, we have been committed to providing our clients with competent, caring, and experienced legal services. Learn more at McIntoshLawFirm.com.
The new year brings new health goals and wealth goals. Protecting your identity is an important step. Your info is in endless places that could expose you to identity theft, leading to lost funds. LifeLock monitors millions of data points per second. If your identity is stolen, our restoration specialists will fix it, guaranteed, or your money back. Resolve to make identity health and wealth part of your New Year's goals with LifeLock. Save up to 40% your first year with promo code NEWS. Visit lifelock.com. Terms apply.
Our daughter Jessie loves playing detective.
A clue.
But since we discovered she has sensitive skin, we've been playing detective too.
We thought the problem was our puppy.
But it was actually our old detergent.
Aha.
So we switched to Tide Free and Gentle. Tide Free and Gentle provides an excellent Tide clean, and it doesn't leave behind irritating residues like dyes or perfumes, so it's gentle on your skin.
Case closed.
If it's got to be clean, it's got to be Tide Free and Gentle.
The button pushing stops here.
WSIC. Local starts here.
This is a Bloomberg Money Minute. We're watching the airline industry and American Airlines. CEO Robert Isom expressed his deep sorrow in the wake of last night's catastrophic midair collision of a regional jet with a military helicopter near Reagan Airport in Washington, D.C. The American Eagle jet was operated by PSA, a wholly owned subsidiary of American. Reagan Airport is closed until 11 o'clock this morning, Washington time. Investors are watching earnings as well today. UPS shares were lower ahead of the opening bell. The company tempered expectations for a long-awaited rebound this year when it comes to demand for its shipping services. But Meta Platform shares were higher. CEO Mark Zuckerberg predicted what he called a really big year in artificial intelligence. And futures were mixed this morning after stocks moved lower yesterday. Declines ranged from almost 1/3% to around 1/2%. Gina Cervetti, Bloomberg Radio.
Home of the best talk.
WSIC. Local starts here.
Call now to speak with certified financial planner Joshua Dobi at 844-STUDIO-4. It's Dollars and Cents on 105.9 100.7 WSIC.
Breaking news, expert analysis, and the stories that matter most, all in one place.
I totally acknowledge seeing flames is a scary situation.
WSIC News Talk Now.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second half of today's show, Football Reference. You got 25 minutes, 15 seconds until we get to the 5 o'clock bell if you're a 9 to 5er. And I appreciate you hanging with us here as we're talking about all things economic, financial, and I know I kind of hit you with the fire hose there right before the break there. We're just motoring through all kinds of earnings reports, talked about DeepSeek and the impact that they had on the markets here earlier this week. Pretty amazing stuff. We're going to be talking more about them, I'm sure, especially as the ripple effect and the hypersensitivity to all things AI related right now continues to keep it on the market. But let's pivot a little bit. As I told you, we got the Super Bowl coming up here in a week. You know that. And I got to give you a little bit on the Super Bowl end of things. First of all, a little data point here. So on this day or on this date or during this week, let's call it that. This would be in the year 2000. So you will need to have at least as little, or if you have hair as gray as mine is, to remember 2000 and the 2000 Super Bowl. But specifically, not looking so much at the sporting event itself as the fact that in the year 2000 for the Super Bowl, there were 17 so-called .com companies. Now, this was the front end of the internet. This was when the internet was really just starting to take off in terms of its pervasiveness in our day-to-day lives. This was 25 years ago, and there were 17 companies that spent a total, and when I'm talking about 17 .com companies, I'm not talking about Amazon. I'm talking about startup companies. I'm talking about companies that were a little bit more, in many cases, than just an entity working out of somebody's garage, literally. And anyhow, these 17 companies, a lot of them went for it as far as Super Bowl ads were concerned. So between the 17, they spent a total of over $38 million on Super Bowl ads. So they went for it. This was their time. They were raising money, tons of excitement in the markets relative to all things internet and .com related there in the year 2000, which if you're a student in the market like I am, you will also recall that was the absolute peak, meaning that March of 2000 was the absolute peak of the market at that time. And unfortunately, the next year, so in 2001, come Super Bowl time, at least 3. And that's all I could find. I'll bet it was more than that. But at least 3 out of those 17 were already in Chapter 11 bankruptcy, in no small measure because of how much cash they spent on their Super Bowl ads the previous year. So it was literally, it was pretty much the zenith. And I do recall it. I don't remember all of the ads, but I do recall that there were a number of companies, I just never heard about them before, who had Super Bowl ads there in that year of 2000. And that was really the peak of euphoria because that crested out market-wise in March of 2000. And then we really took it on the chin, meaning we, the market, especially all things internet.com related there. And even, like I said, at least 3 of those companies, I think it probably was more than that, but at least 3 of those out of those 17 were in Chapter 11 within 12 months after that. So pretty amazing stuff. All right, let's keep moving. I want to give you a couple of real quick ones on the earnings end of things here just before I move on to next things. And I'm going to talk a little bit about Super Bowl and food and the fun that goes with finance on that. How do you like that alliteration? I even said that quickly. And but I got to talk about UPS. UPS, umbrella Paul Sam, UPS, ticker symbol, of course, and not a recommendation to buy, sell, or hold the stock or the bonds. Came out with some not very encouraging news in their quarterly report. And so the stock was down about 14%. But really what took the market, this was out there, but I don't think the market was expecting it to happen right now with UPS. But they came out and said basically in 2 years they're going to completely unwind their transfer of packages on behalf of Amazon. And Amazon makes up about 12% of their overall business. So we're talking about a huge chunk of their business. Well, you can look at it a couple of different ways. You can say, well, 88% of the business is not with Amazon. Fair, that is true. But we're talking about 12%, that's a lot of money. It's a lot of revenue that they're saying they're not going to do anymore. And the primary reason for that is not because I think that they didn't mind doing the packages, it has to do with margins. And actually, the CFO came out and said, yes, we're delivering a ton of packages for Amazon, and we keep losing money as a result of what we're doing there. So I think the margins are slim to none, and they're just looking to unwind that, concentrate on some of the more profitable ends of the business. So, but the market didn't like that. Stock was down about 14%, and it's going to be interesting to see if they can make up that business, certainly on the top line end of things, relative to being able to manage that ongoing, because that's going to be a big chunk of business. And we're talking about commerce related kinds of things, talking about consumers. If UPS is out of the mix, I mean, it's good for FedEx, for DHL. Amazon largely is getting into the logistics business. I mean, it largely is in the logistics business, but are they going to get even more so as UPS unwinds their contract with them? It's going to be very interesting to see. All right, let's keep going here. We're going to talk a little bit about food. You know, we like to talk about food here on Dollars and Cents, and it's Super Bowl week, so we got to talk about some things that are Super Bowl related. I mean, we talked last week, producer Reese and I were talking, reminding that we talked about that combination that we couldn't agree on it. You know, it was that whole cinnamon toast crunch cereal pizza flavor, which again, pizza flavor, cinnamon, sugar, maybe that's good on your end of things. And certainly it must have been good with some sample group that they brought in to test it. The General Mills did. Ticker symbol Green Indigo Sam, GIS, not a recommendation to buy, sell, or hold the stock or the bonds. And then put that combination together. I think they were trying too hard to be relevant for the Super Bowl season. Now, speaking about pizza, I did a little bit of research on pizza, which I love pizza. And I know people get real passionate about pizza. You got the folks who like New York style, the thin, floppy, greasy kind. You got folks who like the Chicago style, the real thick, the cornmeal crust kind of thing. I learned a couple of years ago there's a Detroit style end of things, and there's a Hawaiian style. There's all kinds of pizza out there. I'm sure you have a favorite if you like pizza. You probably are very passionate about that. Not here to argue that with you on on that end of things. My favorite pizza is the one in front of me, generally speaking, meaning whatever one I'm going to eat next. But a couple of interesting anecdotal sort of things as we're in Super Bowl week when we're talking about pizza. And this was a little poll done by the Harris Group, or the Harris Poll Company. Took a survey here last year of 2,000 people. 21% of you said that pizza is your favorite food. I kind of disagreed with that. I'll bet more than 21% of you would actually say that pizza is a favorite of yours. Kind of interesting, though, in terms of favorites and other nuances. This is all online if you want to take a look at the Harris poll that's out there. But what I thought was interesting, they did a most popular type of pizza in every state. And pepperoni, I mean, we like some pepperoni on our pizza, at least according to this poll. I mean, about half the states said that pepperoni is their favorite topping on there, followed closely behind by meat lovers, meaning I'm assuming that's pepperoni plus other assorted meats on the pizza. That was true for the state of North Carolina, that they like meat lovers. And then we had one straggler out there, Massachusetts, said that veggie was their favorite. So no meat on that end of things, but as far as I could tell, they're the only one out of the 50 states that said that. So again, not a very scientific poll, only a couple thousand folks, but kind of interesting. And also the most popular day of the week. This may be implied when it comes to pizza. The most popular day of the week where folks eat pizza, Fridays. Kind of interesting. Yeah, kind of interesting. Friday pizza, I think, is, and I've also heard Sundays as well. Sunday also a big pizza day as well. Producer Reese says he's a Friday pizza guy. See, you did. See, that's where you were raising your hand there because you had it. I like it. I like it. All right, let's keep going here. One other food item, kind of interesting. We probably did some weird combinations last week. You probably were listening to some of these collaborations that we were talking about last week. And I'll admit, they were, I shared with you, they didn't really make a whole lot of sense to me. So I had to go find some ones that made a little bit more sense. And I did find a couple of here that we saw now. Here's Eggo, so Kellanova owning, Rice Krispie Treats, which Rice Krispies owned by Kellanova, the old Kellogg's group, and Eggo. Now they're getting together to make some ice cream combinations, and I'll tell you what, I did like these. So these are some of the combinations, Kellogg's, Eggo, and Rice Krispies, the combinations that they're looking at. And they're looking at things like buttery maple ice cream, chocolatey chip ice cream, blueberry ice cream. They even got ice cream sandwiches, also blueberry, chocolatey chip, and buttery maple. And then they got original. These are the Rice Krispie ones: original, strawberry, and triple chocolate. Now I put all those together. I mean, I could put the pizza in one hand. I could put an ice cream sandwich in the other hand. I'd be all right. I mean, you could just leave me in a dark room with the football game on, and I might be just fine. You just come back and get me, or I'll just need to reload whenever I eat the pizza and the ice cream sandwich. That sounds like a pretty good combination to me. All right, a little bit anecdotal there. Appreciate your indulgence on that kind of thing. Like to chat about that kind of stuff. Keep you interested, right? We're going to warm up here as we get ready for the fourth quarter here on Dollars and Cents, presented by North Main Financial. But we're going to take a couple of seconds first to hear from our sponsors. Hang with us as we come back here in a few moments on WSIC.
There's more of Dollars and Cents with certified financial planner Joshua Dobi on the way from 105.9 100.7 WSIC.
Well, increased fire danger still hangs with us for the next couple of days, so avoid burning if at all possible. Overnight, a partly cloudy sky. Temperatures will dip back into the upper 30s and low 40s. For our Thursday, we'll see some sunshine to start, but extra clouds start to mix in for the afternoon. High temperatures are just a little bit cooler, with highs in the low 60s. We'll go back down into the mid-40s overnight. Mid and upper 60s back for our Friday with scattered rain by the afternoon. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here's your WSIC community calendar. Beer Lab in Mooresville presents Music Bingo on Thursday night, January 30th. 4 rounds begin at 7 p.m. with a chance to win prizes for each round. Don't miss Ghostface Brewing's beer lineup and their menu of pizza, wings, and salads. Beer Lab on Broad Street in Mooresville presents Music Bingo on Thursday. Bin 110 in Cornelius kicks off 3 straight nights of live music on Thursday, January 30th with Peyton Belligan and Christian Stewart. Friday night, Chasing Phoenix performs, and Saturday night, String Theory takes the stage. Make your weekend count with 3 nights of live music, Thursday through Saturday at Bin 110 in Cornelius. On Friday night at Micaiah's Bar and Live Music, Rumor Mill performs their first show of 2025. Come listen to the classic rock songs and sounds of the 70s, 80s, and 90s with Rumor Mill at Micaiah's in Mooresville, Friday night at 9:30. The Statesville Chamber of Commerce presents the kickoff event for Surge, a group for young professionals of Iredell County, on Friday night at the Watering Hole on West Broad Street in Statesville. Surge fosters relationships, develops business opportunities, supports civic involvement, and promotes an overall investment in the future of the community. Join Surge for games, food, and networking Friday at 6 p.m. at the Watering Hole in Statesville. Class is in session at Charlotte Motor Speedway with their selection of racing schools. Buck Baker's Seat Time Racing School was founded in 1980 by 2-time NASCAR champion Buck Baker. Graduates include Jeff Gordon, Tony Stewart, Ryan Newman, and thousands of people just like you. Book now at 704-998-1957. Visit charlottemotorspeedway.com for more details and information. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Now more of Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Be a part of the conversation.
We can't fix America's debt by starving its people.
Have your say.
One shooting after another, and we're doing nothing to solve it?
This is WSIC News Talk Now.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Fourth quarter of today's show, Football Reference. 11 minutes and 40 seconds until we get to that 5 o'clock bell, and I appreciate you spending that time with us here as we're giving attention to all things economic, financial, Yeah, football and food. You get that alliteration as well. That's coming in here. I got one more for you. We were talking food right before the break there. Kind of anecdotally, just yeah, it's financial, it's Super Bowl, it's big money, but also to keep your interest as well. Got one more here. I thought this was kind of interesting. As I was just doing some of my research and picking up some food related kinds of items to talk about here as well. We enjoy not only talking about it but consuming food here at WSIC. But best fast food soups. Now, I don't really think of soup when I think of fast food or quick serve kind of restaurant experiences. This came from Taste of Home publication, so you can take a look at it online. This is not anything proprietary, and I don't think was particularly scientific in terms of how they do that. But they said they took a survey of about 5,000 folks. That's a fair number of people. Don't know that it was completely accurate of the masses, but certainly insofar as this survey is concerned, kind of interesting. Now, when they did soup, they also included chili. And I know there are a lot of folks out there who dispute whether chili is a soup or not. I'm not going to get into that conversation. They included chili as a soup. You can dispute it or disagree with their findings here, because I picked out of the list, they had a short list there. I picked out 1, 2, 3, 4, 5. And 3 of them are chili. So if you cut out the chili, there'll only be a couple here that you'd have on this list. But the top of the list, well, I'm going to start at the bottom. Isn't that what we're supposed to do? The one that was the least favorite out of this list, Panera. Thought that was very interesting. I thought Panera would be closer to the top of the list, but their broccoli and cheese soup was not high. And I know they got a whole collection of soups at Panera, but was not high on the radar screen. Next one up from that, so getting better, I guess, according to the poll, McAllister's chili. Then right above them, Wendy's, and then ticker symbol WEN, by the way. Walter, Edward, Nancy, not a recommendation to buy, sell, or hold Wendy's stock. Also their chili. And then the top 2, so number 2, Chick-fil-A, their chicken noodle soup. I mean, so obviously a big favorite according to this polled group. And then number 1, which I thought was very interesting, and this is certainly applicable to those of us here in the South, Culver's chili. I thought that was very interesting. I hadn't really thought of Culver's as a place to get chili or soup or things like that, but boy, this particular polling group thought that Culver's chili was the top of the list. Very interesting, anecdotal, modestly financial. I appreciate you listening to those kinds of things. All right, let's keep going here. Let's talk markets. We are, I mean, can you believe it? I mean, we are at the end of the first month already. I mean, it is amazing. I mean, yeah, I know there's some joking out there that January lasts about, 500 days. That's probably not too far off, especially if you're one who lives in some cold weather climates, and certainly the blahs that come after the Christmas, Hanukkah, and New Year's holidays. I get all of that. But it's still, I mean, here we are sitting on the 30th of January as of the time of this live broadcast, and here we are at the end of the month. We're staring February in the face here already. Very interesting month on several levels. Strong month in January as measured by our most popular stock indices. What's been interesting about January to me, and you heard me talk about this a little bit earlier in today's show, is that we now have increased the market breadth. What does that mean when we increase the market breadth? Well, really what that means is that up to really the end of last year, we were in what we sometimes call a narrow market, meaning very positive performance as measured by our stock indices, but a relatively narrow segment of the market that was really doing so well that it overshadowed the other parts of the market, which were mediocre to negative. And that's really what we saw. We really see that for the last couple of years. Now here in January, excuse me, now here in January, we've had a very positive market relative to the stock indices, but it has been a broader mix of companies and a broader mix of sectors. Now, I don't want to get carried away with 1 month's performance. You know that. Not enough points on the data plot to be able to make any kinds of assumptions from that. However, it has been interesting to see that additional sectors, I'm looking at you, financials, not only on the big money center bank side, but on the regional bank side. I'm looking at you, oil and energy companies, the traditional producers, but also you, the pipeline companies. I'm looking at pharmaceuticals, not only you, the more traditional legacy companies, but also biotech. I mean, it has broadened out. And at least for this month, there has been a broadening of positive performance inside of the market. Now, I got to say this. Now I've puffed up the balloon. Now I'm going to put the proverbial needle in it a little bit here. Be wary. be wary right now. No, I don't see anything out there. No, I don't have knowledge that nobody else has. It's not, nobody does, by the way. No, nobody does in advance. So I'm not saying anything like that. I'm just saying to be wary. You get 3 or 4%, in a single month, as measured by, again, our most popular stock indices. You get 3 or 4% positive performance on top of a couple of very positive years. There has to be a reversion to the mean, and there will be a reversion to the mean at some point. What will be the trigger for that? I have no idea. But it's kind of interesting, especially with what happened earlier this week. We were talking about DeepSeek and the impact that had, especially on semiconductor companies that have been the high flyers here in the U.S. for the last couple of years. I mean, some of them pulled back 10, 15, 20% in a day. I mean, NVIDIA, the largest company by market capitalization, when we started the week, I mean, it had over $500 billion, it was $500 billion, excuse me. That's that moved in a single day. I mean, that's outrageous. I mean, you look at hundreds of billions of dollars of market capitalization in a single day. That's almost unthinkable, and it would have been unthinkable even just several years ago. But that's what we're seeing. So is that what's going to be the sell-off? Is that where things are going to pull back? Certainly, things have pulled back for the balance of this week with some of the highest flyers. No doubt about that. Does that mean that's what's going to cause a market rotation into cash or things that are out of the market? I don't know. That's the most legitimate answer that's out there. However, it doesn't seem at this point that there are the macro kinds of economic factors which would indicate that we're moving in that direction. That being said, again, purely technical analysis here with what I'm saying right now, meaning basically chart reading kinds of things, we're due. We're due for a technical correction. And I know I've been saying that for about a year, and I'll raise my hand. It's that absolutely I've been saying that for about a year or so. And you can say, well, you're just going to keep saying that until you're right. Oh, maybe that's going to be part of the case. But I'm also saying it so that you're cautious. I'm saying that especially when we're looking at market performance, I want you to be cautious. You can be aggressive and cautious. Let me say it this way. You can be aggressive and prudent, right? Because you don't want to just be following the herd into whatever's coming next as far as what the hot stock, what the hot investment is. Because yes, that may work for a little while, but it also can absolutely catch you sideways. And if it catches you sideways, it can move very, very quickly in the opposite direction and really set you up with a notable loss. So when you're investing, when you're continuing to add, when you're adding something new to your portfolio, maybe you haven't had it previously, make sure you know what you're buying. I have this conversation so frequently, I feel the need to repeat it here on Dollars and Cents because it's something that I think that folks need to hear because the time to change is before something negative happens. Going to say it again. The time to tweak change is before something negative happens. If the floor falls out and you're down 25, 50% very, very quickly, you say, all right, now I've learned my lesson. Now I'm going to go do something else. Well, wait a minute. You sure? You sure this is the time that you want to do that? I mean, certainly moving into cash, all you're going to do is lock in your losses. So is it best to stay in the vehicle that took you down the floors that you experienced? Is it best to look at something else that's going to raise you back up again? What is it that's the most appropriate thing to do? Generally speaking, stocks are those kinds of things. We work in an inverse thought process because we think in straight lines when it comes to this kind of stuff, that we want to buy more when they're expensive and we don't want to buy them whenever they're less expensive. It is an amazing phenomenon, and we repeat it time and time and time and time again. I'm going to keep saying it because we do. You look at market history, it's absolutely the case. There was a study out a number of years ago. I know I've mentioned this. I'm going to mention it again because it speaks right into what we're talking about here in terms of how folks buy investments. Peter Lynch was a renowned investor with Fidelity Investments. Fidelity Investments, monstrous mutual fund and institutional manager out of Boston. And Peter Lynch was really the golden child there in the 80s and the 90s. And he crushed it. His average return over the time that he was managing the Fidelity Contra Fund was an annualized return, meaning average return per year, 22%. He was right place, right time, yes, but also amazing kind of returns. Amazing kind of returns inside of that fund. Fidelity Contra Fund, not a recommendation to buy, sell, or hold the fund, by the way. This was back in the 80s and 90s. This was 30, 40 years ago when this happened. Do you know what the average investor experience inside the fund was during that exact same time frame that Peter Lynch was the manager? You may have seen this. It's out there. It's on the internet. 4%. 4% annualized per year. You say, wait a minute. Now, how can it be true that he averaged 22% when he was the manager, but the average investor experience was 4%? It's because of when they bought and when they sold. And generally speaking, the majority of the money came in after a spectacular year inside of the fund. And money would whoosh back out after a miserable year in the fund. So literally what folks were doing during that time, by and large, was buying high and selling low. So when we're looking at those kinds of things, and I know I spend a lot of time on this, and I know that you're probably getting tired of me repeating it, but understand what you own and why you own it. Be disciplined in advance. Just reacting or just buying something because somebody else has bought it or somebody else has had a great experience. Folks, that's not strategy, that's guessing. And if you do that, yes, you can get away with it for a little while. But at a certain point, those rubber bands snap back on you, and they don't feel good when they do. So I'm offering this up to you again as something to think about in advance. The markets have done well. We've had another positive month, as looked at by our most popular stock indices here in January. Perhaps you're doing very, very well inside your portfolio. I'm not saying to change. What I'm saying is pay attention. Make sure that you're making prudent decisions. All right, we got to get going here on Dollars and Cents presented by North Main Financial. I appreciate so much. You hanging with us here at the 4 o'clock hour here on WSIC. Tune in next week and see you then.
Serving you better than ever before. WSIC, Statesville, W290DK Mooresville, W2